Hey everyone, welcome back to Your Nifty Guy. I hope all of you are doing well. Today we are breaking down how the market behaved, what that means for short-term momentum, and the exact trade plan I'm watching for tomorrow. I'll walk you through the key levels, the setup I like, where I'll place entries and stops, and the little things I'll be watching during the day that most people miss. If you trade with discipline and want trades you can actually follow, stick around. I'll keep it simple, practical, and actionable. Quick reminder, if you are new here, hit that subscribe button and turn on notifications so you don't miss tomorrow's plan. And do not forget to like the video. Put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to both. Let's jump straight into the charts. Today, the market opened with a very small gap up, which looked like a very good opening. But then the first 5 minutes candle, which created a new high, and we had a plan of aggressively going long, as in not aggressively going long, but then if you are an aggressive trader, this was a spot to go long. If you are a safe trader, this was the place to go long, right? As we had discussed in yesterday's video. So this high was created around here. But then RSI created a new low. While our price created a new high, RSI created a new low. And because of the momentum during the last closing hours of yesterday, and RSI already being too extended, I decided to not take this particular trade and wait for the markets to give me some more confirmations and not jump at a trade straight away. Now, post this particular thing, it was a good thing that I did not enter at the break of this particular pullback. As you can see, markets remained extremely sideways. Even if I would have entered into this trade, the most logical stop loss would have been this swing. And the stop loss was never triggered. Market moved up merrily after that. But then again, these are some things that we need to keep in mind while in the live market. And these were my reasons for not entering into a long trade around here. Post this particular trade, I spotted this trend line which was coming in. So this kind of looks like a pole and flag. And I was wanting markets to give me a good break. And around here with a good uh, double bottom. It was not a double bottom because we are already trading at a top. So for a double bottom, we need the markets to come down and form a double bottom. So this was still a good enough base where market changed its structure, broke out, gave us the pullback that we needed. And I was ready to take and enter into this particular trade. But then on the spot, the prices went up above the consolidation or above the pullback. But on the options chart, the prices did not go up above the same levels, right? So on the call chart, the same level was not breached. And that was the reason I did not get an entry into this particular trade. Uh, the entry that we got at 12:05 on the spot chart on the options, this particular level was breached at around 12:30, right? And because of this, I did not again enter because see, at the end of the day, you're not trading the spot chart, right? You are trading the options chart, and you are doing your analysis, and you are ready to take an entry, and everything, every planning and everything is done on the spot chart. But then the entry has to be done on the options chart, and that is exactly where markets did not give me an entry. Today, I believe the VIX was in red, yes, minus 1.26%. And that was the reason while the market was moving slowly and steadily. Again, there was no good momentum in the markets. The markets was moving up slowly and steadily. And as a reason, I did not get any entry here as well. Post this again, as you can see, markets touched this particular trend line, gave us a small pullback, breached up again sideways. So in total, no trading day for me again. But then again, there is no such thing as a bad trading day, right? Either you take some good money or you take some good lessons. So today, the thing that we observed, so like yesterday, what I had told you was, so we got this momentum at around the close of the day, which came in unexpectedly on Friday, right? And today's price action was crucial to see whether this was a actual buying, are we getting a follow through, or this was just a trap to lure people into long trades and then kind of trap them and reverse it from here. So, positively speaking, we have got a good follow through, right? Uh, on a daily time frame, if we look at the markets, the key takeaways are we have actually, right? So we have this particular move which came in, we fell down a little below, did not touch the daily fib levels as well. Of course, it's not necessary that we'll be going down to the zero point 0.5 to 0.618 zone. This is the zone that I pay the most importance to. That is why I only marked this on the charts. But then, of course, market retraced, and then we have again created a new high on the daily time frame as well, right? We also got a closing today above the 26,000 mark. 26,000 is a round number which can and has in the past acted as resistance. So round numbers will act as resistance or support. So we have got a good closing today, right? We'll be deleting this for tomorrow. We have got a good closing. We have got a closing above the trend line which was coming in, right? So this is the trend line that we had drawn before today's price action. And on the 75 minutes time frame, we need to adjust this level. All right, so now the zero point 0.5 to 0.618 zone will be around this. So again, for tomorrow, we'll keep the plan of action very, very simple. But then before we start the trade plan for tomorrow, tomorrow is the weekly expiry of Nifty. So again, the usual disclaimer from my end. If you are trading Nifty, if you are into options buying just like me, make sure to shift your regular trading to the next week option. Do not trade in the 18th of November expiry. Trade in the November monthly expiry options. You will be paying a slightly higher premium for your entries, but then you will be doing your capital a much needed favor in case the market goes against you, or even if not against you, even if the market goes sideways, the kind of blow that you will take if you are trading in tomorrow's options will be much more higher, and you will be simply putting an extra layer of safety blanket to your trades. This is a rule which I personally follow on expiry as well as expiry minus 1 day. So today the trade, uh, right, this particular trade at the break of this trend line, which I was observing, right? The trend line that I do here observing, I was looking at it in the November monthly expiry option and not in tomorrow's option. So that is what that's a personal rule for me, and that is what I always urge people to do. Do not uh, come here thinking that, okay, on expiry as well as very near expiry, you get cheap options. Those cheap options will not take a lot of time to go against you. So make sure to make this small change. Again, I know it's a bit of a difficult thing to pay a higher premium when you have the option of executing the same trade with a lower lower capital base. But then thinking long term, this should be one of the primary things that you need to make a change if you're not doing it already, right? And then of course, if we get the expiry special move at the end of the day around post 2 p.m., that can be traded as a hero zero trade in the in tomorrow's expiry, right? So yeah, disclaimer being done for tomorrow. Of course, this high and 26,200, I believe. That will be the, sorry, 26,100, right? So this is going to be a good level to watch out for. So I'll quickly be marking this as well on the charts, right? So anything above today's high with a pullback, we go long around these levels. I'll be watching the price action closely, right? Because this has been a resistance in the past, and how price reacts around here will be supremely important. So that is something that we will be doing. All right. See, the major trend for me has been on the bias, not the trend, but the bias has been on the long side since quite some time, and that is exactly what I have been saying in videos. So I'll be avoiding short trades. Honestly, I'll be avoiding short trades until and unless we are below today's low, right? In case if we are going below today's low, that is the only point where I will be willing to take a short trade. But then again, we also have the 75 minutes fib level around here. So it would be a good idea to look at some buying if we approach these levels and look for a short trade only below these levels, right? In case if this complete price action starting from Friday's up move at the end of the day, along with today's slow and steady movement on the upside, is a trap, and we go down below this, it is only then that I will be willing to take a short trade. Otherwise, this buying looks solid. Today, even in cash market, both FIIs and DIIs have been net buyers. The numbers by FIIs, of course, is very small, but then considering that they have been selling for quite some time, it's a good positive sign. So, and that is something that we should focus on. And yeah, this is the simple plan I believe we should stick to. And tomorrow being expiry, make sure to keep your trading very simple, reduce your quantities. Do not take unnecessary risks, right? Do not try to find out trades that leads to over trading and trail tightly, right? Keep your strict stop losses. Of course, risk management is in your hand. So yeah, all right, team, that wraps up today's breakdown and the plan for tomorrow. As always, stay disciplined, stick to your levels, and don't force trades when the market isn't giving clean signals. If you found this video helpful, make sure to like the video, drop a comment, and share it with someone who trades Nifty. And remember, consistency beats everything. I will see you in tomorrow's session. Until then, trade safe and stay focused. Cheers.